Looks like we're crossing a precipice, guys. We're looking at a gamma wave already in progress and the mechanics behind why there is a potential gamma squeeze in the making. We also were able to predict this bounce right here. So now, what is the next step? After AMC had been able to push past a high of $20.58 today, and finally, we're going to talk about this 7th day of 100% utilization. All you guys got to do is make sure you stick to the end of the video and slap that like to make it 1200 and above. Let's first take a look at how many options we are looking for to be able to ramp upward, and then talk about exactly what the potential gamma ramp is. My name is Andrew. I'm a data scientist here in Silicon Valley. I want to be able to talk quickly about what a potential hedge looks like. If you have a out-of-the-money call, let's take a look at 2 days ago. We'll be looking at February 14th, the day of love. We were able to check the far right side of that options chain right around that $30 mark. So right here is a large amount of out-of-the-money calls. If you guys don't know too much about options, all you have to know is it's a bet that AMC is going to be at this price in the future. Someone has to be on the opposite side of that bet, which is why we're now looking at the precipice of a potential gamma squeeze, because the person that sold these calls don't want to be holding the bag if the price of the stock gets closer and closer. You'll notice that around this day is when AMC was right around here at the very bottom of this bounce in the 14th. So it was closer to about $18 than about the $20 range that it is currently. Therefore, these calls that are at the $30 mark are getting closer and closer to reach by the strike expiration. Now, the most important part of that is you can think of it as a loading bar, because the portion of these calls that are actually hedged, which means purchased by the person on the opposite side of the trade, the person that sold the call, they are going to slowly buy back their position. So they sold you the option, right? Like we call in options, to be able to buy the stock at $30 strike. No one wants to be able to buy it right now at $30 because it's worth a cool $19.67. However, if the stock exceeds $30, you are suddenly looking at a wonderful deal. It's a discount. It's a coupon, essentially. The coupon is going to cost the person who's making those coupons a lot of money unless they have the product in stock, which is why the closer we get to $30, the closer we get to a total hedging of this position, of the person who sold this position originally, this option. Now you're taking a look at a slow ramp upward, and a uncontrollable ramp, as we saw in January, as we saw in June of 2021, of the stock moving closer to those unhedged, those naked calls. And so you guys have probably noticed the difference between having a covered call, something that you've already purchased the product for, you're just holding both positions, or a slowly hedged call, which is how these market makers make their money. So a 7th day of 100 utilization, which means that we are now looking at AMC on the precipice of being a very, very hot commodity, because as you probably have noticed, the less supply there is, the less readily available to either borrow or short. You're going to have a lot of people waiting on the other side with these positions that they cannot cover. And that is also hand in hand with the price action that we've seen. Now, AMC today, we saw a double bounce right here. Not a double bottom, I would say, since it's not coming from a downtrend, but a double bounce today from $19.20. Then AMC was able to push all the way up to $20.58 before falling back down underneath its current VWAP here on the 30-minute chart. If you take a look at GME, very similar. We'll be able to take a look on all of the stocks of winners and losers on the left-hand side. But GME was able to cross through its bounce here at the EMA. So this is a dynamic resistance, dynamic support here. You guys probably noticed that there was a bounce off of the lower than 120s, 25 here, and then the second bounce was off of the 125.35 level of support. So we are looking at a raising. You can actually draw a straight line with a slope, non-zero slope here, of a level of resistance that is ascending. So we are looking at ascending resistances up here and an ascending level of support. So both of these stocks right now are facing upward momentum in a short term, a couple of days of trading, which is a very good channel to be on, especially since there are so many options that are going to be out of the money that are very, very close to be in the money. That is exactly the definition of a gamma wave forward. So let's once again take a look. Yesterday we saw we're about 30-ish thousand, not even, right? Calls expiring in the money. You guys can check that video from yesterday. Now you're looking at all the way down here, 42,000 in the money calls with another $250,000 waiting. So each of these is 100 shares of AMC waiting to be able to be hedged on its way into the money. So we're looking at a large amount of calls still not all the way hedged, still naked, which means a lot of people are waiting to be able to hold on to their tickets to the moon. Let's take a look at other reasons why we are paying attention to the resurgence of these stocks. You had seen that the 200 EMA was the level of support that gave AMC the bounce that it is currently on, from $17.71 all the way up to $20.58. Now, this is not where AMC was rejected in the very last time. On the 10th of February, we were rejected all the way up at $20.94. So that means that this was a more conservative rise to be able to try and reach halfway up into this level, this no man's land here between one level of resistance here, $19.63, and $21.78, which is why we're currently underneath $19.70. We are also paying attention to the same thing around GME, except a little wider of a gap. We're trying to push all the way back up to 147.17, which is the next level of resistance to watch out for. All right, you guys got a little bit of their data behind. We had the short interest right here, about 21.16%. Current short interest about 108.62 million. That is on the 500 million float for AMC. Quickly look at GME as well. While I ask you guys, hope you're having a nice day. If you get to this part of the video, make sure to leave a comment. 100 utilization for GME 7 days ago. Also a week anniversary for the 100% utilization. A rise in GME short interest, getting close to AMC's 20+% now, 13 million on top short. So we're paying attention to the fact that this cost to borrow is still very low. We're waiting for a sharp rise and uptick in either to be able to really start squeezing the stock into very low supply, very high demand. Okay, once again, not financial advice, but I hope that gave you a little bit of data for your day. If you guys had any entertainment or education out of this video, make sure to slap that like again, friendly reminder. And finally, if you guys see this cat in this video, make sure to comment down. And for now, but not for forever, check out some of the links in the description if you guys want to get started investing in yourself, and we'll see all of you in the money. Thanks to those of you who make this possible, those of you who press that join button next to the subscribe button, and if you're staying for a while, make sure to hit that subscribe button on your way out as well. Stay tuned, and for now, but not for forever, peace.